Okay, all right. Hello, everyone. This is another week, another convergent therapy with Izzy here, where I'm Guillaume. I'm the founder of Panoptic. We're creating this show to help LPs like Izzy to convert their positions into Panoptic or use Panoptic as a way to hedge, and overall just kind of display this other side of Panoptic, which is not just options trading, but also at the same time hedging and also LP positions. First of all, how are you doing today, Izzy? Had a nice weekend?
Yes, I did. It was very hot in Boston. It was in the 80s for no reason. So
Not something we expect often.
yes.
Uh,
How about you?
yeah, definitely also took advantage of the warm weather, did some yard work, which seems to never end. There's always something, but that's fine. And yeah, um, yeah, no, very relaxed weekend. Let's put it to that.
Yes. I saw it's not terribly unchanged. Bitcoin kind of dropped down a little bit, but an ETH seems pretty
Yeah, I
now
mean,
that Dubai ended.
I don't know. I think the tariffs and the macro is definitely something that happens to guide or push the markets around. But now even traditional markets are like, all right, whatever Trump says can be walked back. We may take it seriously, but then that's never kind of as bad as it seems. Maybe I don't know if he wants to purposely crash the economy, but people said, okay, maybe we take it less seriously this time. So anything that he says, it seems that has less and less impact.
Yeah.
Meaning that now crypto and yeah, Bitcoin now is a little bit down below 95K, but still holding steady. And I think, yeah, I don't know, equities are a bit down. Yeah, it's not too bad.
Yeah.
Uh, do you trade some? I don't know. Do you trade? Do you invest in traditional markets? Or
Yeah.
you
I mean, same thing, right? That's what I was joking about last time. It's like I'm trying to separate my accounts. I've got the real retirement accounts that are just kind of across all like the index funds. And then I have like fun account for like, yeah, like I said, I'll just like support my friends at whatever company they're at or
That's
that
right.
kind of stuff.
Do you
Like
use like one of those cool apps like Robinhood, or it's mostly Fidelity?
honestly, I mostly trade just from my Bank of America. I have the Merrill Lynch. Like
Hmm.
you can kind of with your like Roth accounts and stuff, you could do some like fun trading
Any
with that.
options plays, or
No,
I don't know. Yeah, Bank of America is one of those that will gatekeep it
they
quite.
will. They won't even. Yeah, I was actually they wouldn't even let me buy like the Bitcoin ETFs and stuff
Really.
for my retirement accounts. I was really annoyed. Yeah,
They say it's just not showing up. It says unavailable.
it's
So weird.
unavailable. It'll
That
show up, but like it won't let me. It won't let
this
me
is
do it.
it. Like you can almost grab. This is what finance is kind of doing. They think they know better than you that you should not even invest in Bitcoin.
Yeah,
So Pwomp pwomp. All right.
yeah.
Enough about regular markets. Let's talk about the real cool ones, which are panoptic markets and also crypto markets. So this is the maybe let me get this a little bigger. This is the landing page. We actually are live on base, and we're doing a competition starting at 1 p.m. So this is very cool for anyone that can trade or wanted to trade options and could not do it on mainnet because you were a bit more gas sensitive. You can do it on base. Very excited about this. This is mainnet, the Helen Keller account, which is what we've been kind of trading with Easy here. Is can I move this? Yes, okay. The Helen Keller is on mainnet, but you can definitely trade on base as simple as changing the chain here or changing from your wallet. But this is the again trade tape. We can see all the positions, but from the portfolio page, the one thing that Helen Keller did over the weekend was to burn that BTC ETH position. So we have a migrate here. We can see we had the wrap Bitcoin, wrap ETH LP position. This was burnt, and now the funds sit in the BTC ETH Panoptic pool. And I don't think we got that, but Helen did not open a new position, but we can do this certainly now. The process is that you have to burn your old NFT, move the funds into Panoptic, and then mint a position. Cool thing about the Pectra update, which is in 2 days, we can do this all in a single transaction. Currently, it's two transactions. So maybe Helen got distracted. Uh, but at least we have funds from the Uniswap NFT to the Panoptic pool. We still have four positions open with funds. So maybe do you want to start with trying to mint a new position in BTC ETH or convert one of the other positions that are here to Panoptic, or maybe keep them open and kind of do something else?
Yeah, well, let's mint a new position.
Yeah,
Let's just go for it.
let's do it. So we
Yeah.
have ETH BTC. We can simply go to the trade page. Uh, there was a leverage slider, so that we've lost this a little bit in terms of the amount, but let's do the provide liquidity way so that it's a bit simpler. So similar to what we did with Rosalie when she was trading meme coins, but now with you, Izzy, when you're LPing, or you would trade a ratio, ETH BTC, maybe
Yeah.
weird. Do you think like if you're bullish, bearish, or neutral means with respect to Bitcoin, do you think ETH will outperform Bitcoin, stay the same, or underperform? And that's going to guide whether we do bullish, bearish, or neutral.
I mean, and then this is my counter question, I guess. Is this long-term outperformance or like in the next month?
Yeah, so we can choose the time scale. So are you
All
feeling
right,
like
that's right. That's
yearly, monthly, weekly, or God forbid, hourly option? What's your preferred time scale for the ratio trade?
the ratio trade. I would almost go, I guess, long term. I mean, over the last 5 years, it's just been deteriorating, right? Like the ratio. But
Yes,
over
5 months for sure, but yes.
but over the last like I want to say over the last week though, it's probably gone up, right?
So this is kind of from last year
Yeah.
November. Maybe it's gone up, but then it's still in the noise. So there seems to be a support
It
or
seems to be kind of flat, yeah, floor here
yeah.
or something.
This is what happens. Like the bulls or the bears, I guess, sell at some point. They have no more coins to sell. That's why some people look at technical analysis and see some patterns. But because sometimes the market is tired, there's not much selling going on because no one has anything to sell, maybe, or everybody bought the Bitcoin, either ETF or the Bitcoin tokens themselves. So yes, given that we've been going down for so long, do you think it's the one going to keep go down, stay the same, or revert?
I think stay the same and then hopefully revert. But
So I mean, 1 month, 1 month is a start time. There's nothing that could maybe point towards ETH overperforming too. So in agreement with you, I guess. Yearly timescale might be different, but for a month, I would also bet maybe something more neutral
right.
than if you're bullish bearish, it has to realize itself in a month. Otherwise, you are making less money. So unless you're extremely confident about a price move, then yes, the neutral is definitely a safer way.
Yeah.
So we have this. It's a monthly delta neutral position. And we have the leverage. It's a slightly different one we change, but we have the 1x leverage, which is what we had last time. Remember, we can LP on leverage. That means we have more risk, but more reward at the same time. Uh, do you want to test out some leverage play here, or you won't? You say 1x leverage, I mean low liquidation risk, nothing to worry about. Like if you're extremely confident it's delta neutral, my take is that you can add a little bit of leverage there.
I would, yeah, I wouldn't mind doing a little bit of leverage because I feel like the price would have to deviate a lot for me to be
Yes.
right
So
because it's kind of a wider.
yeah, we should maybe update this to show the range, but it's point. And let me try to add the. So it would be 0.24 to 0.15. So if I were to look at this, it would have to exceed the range here that we've seen.
Right.
Go way out in either ways.
Right. I just imagine I'll have time to, I guess, adjust if it starts to move that quickly. I
Yeah.
guess.
And so and then the leverage part is not to go crazy, especially this is delta neutral. It's just do you want to add a little bit more, maybe a return to it. It's still going to be somewhat protected because it's neutral. So leaving the range, if you have, for instance, 2x leverage, which might not be something I consider, but 2x leverage, if it moves, you don't lose twice as much. You just lose maybe 10% because of
Mhm.
the shape of that. And let's take a quick peek, but this is the payoff that you're creating with that position, and current price is 0.019. If you were to go all the way down here, you would lose, I mean, depending on the size, but you would lose about like 20%. And as in the price would go down. Yeah, the price would go down 20%, you would lose about like 5 to 10%. So depending on your leverage. So I would say if you're extremely want to play it safe, 1x leverage. If you want to add a little bit of returns because you think it's really going to stay stable, you can add maybe 1.25 or 1.5x even leverage.
Yeah, I would do 1.25x. If I'm
Okay.
not going to take a directional bet, then I should probably do at least some leverage play.
Yeah, exactly. Directional is tough to be right, but it's also another way to double down and say, I hopefully not insider information, but I have on good authority that XYZ will happen. So let's make it so that I do get a little bit more return. So in that case, so this is the provide liquidity side. We have a choice, which is delta neutral. We have a time scale, which is 1 month. The leverage here can go 0.1%, but we do 1.25x. And technically, you do review position. And what we see here is that it's going to create a position with that leverage. This is the payoff where there's no return, but it's going to change over time. And yeah, seems like a fairly straightforward trade to do. So, Helen, if you're not hearing this, but yes, if you can get information from us, Easy wants a 1.25x leveraged delta neutral LP position on ETH BTC. And yeah, suppose that.
Cool.
And this is kind of the range that may be easier to see, but the payoff will look like this. And again, as I mentioned, the no, it's not remembering this size actually. Let's see. Yeah, that's fine. So let's see. One might be one ETH here worth of contracts, but again, if the price moves out of range, we go from a loss of like 0.03, 0.01. Yeah. So the fact that you are neutral, if the price does move, you have a lot of flatness because it becomes scary. This is what we see with Rosary. When it reaches the edge, this is you when you manage. But given the price range, it's a fairly safe bet. So I would say, yeah, this is one trade that Helen can do.
Yes. Okay. Yeah, I was gonna say so. Like an LP scenario, I guess this is similar to just kind of setting like a wider range, perhaps. But is it double since it's delta neutral? So you're
Yeah,
it
we're
sounds like
doing something.
yeah.
Yeah, we're I would say that most LPs have some understanding of risks on both sides. If the price leaves the range, you have to manage, and this is a payoff that matches this. And yeah, you would normally choose a range in the Uniswap kind of interface. In if you do it through Uniswap, it is a bullish one. This is the payoff, but yeah,
Right.
it's not quite
Not
neutral.
quite the same, yeah.
Yes. So that's kind of the not the education, but the real unlock that we allow in Panoptic is that you're not bound to these bullish slash positive delta trades. You can actually manage your risk and make it so that it is more neutral, which again, a large price move results in a lower amount of loss on your capital than if it was just a bullish one, which is yes, you go out, you saturate, yes, you go down, now you're exposed quite a bit. And what we mitigate is that we decrease the exposure on the downside at the cost maybe of adding exposure to the upside. But both of them kind of work together so that you have something that if the price doesn't move, there's a lot of churning, you get pretty much everything back, more or less, because
So
there's not going to be capital change.
are each of my legs earning separate fees essentially?
Yes,
Or
that's correct. We keep track of them individually, like separately, I mean.
yeah, okay. So
And
I'm almost like I'm earning double the LP fees, right? Or no?
so that
Or I
1.5.
guess it's the same total amount as what one position would be, so I'm still earning the same.
Yes, so you would earn the exact same way, but the 1.25x means that you earn 25% more for the same position, and we have a risk analysis. Once this is minted, we can even see at which price you would get liquidated because there is a leverage component,
Right.
and 1.25x would be an order of magnitude either ways, up or down, which is again something that again Helm will have to manage. But the touching leverage does increase the risk, but yes, it's a fairly straightforward. So and we I don't we don't haven't talked about this yet, but if you choose your strikes as well carefully, yes, you earn more from leverage, but at the same time, you also earn more for these people buying these options. So currently, we would be selling options, earning the same fees as before. But if someone listening or someone else wants to buy an option, they would pay you a little bit more. This is something that, as we learned with Rosalie, is something that could guide your entry point and exit points as well, and not just do selling at any price, but rather seek these higher yield opportunities.
Right. So like seeing how with the selling the call, like you can see how many other people have bought at those strike prices and seeing how like that one, for example, has been
Yes.
is like 50% utilized. So there'd
So
be
yeah, it would earn you again 4% more, which is again depending on your size, but we can see exactly who is part of that trade, who is buying. One seller, two buyers. You would be selling more, so you would kind of impact this distribution. But the this is kind of the next layer. We're an options protocol. We have this options chain kind of drawer here. This is something that option sellers would be very familiar with. This is an options chain which shows the strike and the deltas even in all of that. And in that case, we also show who else is participating, and that kind of guides how much you earn. So, but now since the goal is to just get your feet wet and have some exposure in Uniswap, in Panoptic, I guess, from your Uniswap positions, then again, if we can start over, this is the position that is delta neutral at the money, meaning it's currently the current price, and earning fees, same as Uniswap, but with that 25% increase in collateral.
okay. And
All right.
theoretically,
So go
I
ahead.
guess the other thing we could talk about it when the position's minted and we can watch the management, but someone could potentially buy my options, right? And so I have to kind of manage that as well, I guess.
Yeah, I mean, if it's at a monthly timescale, as long as you're uh, monitoring it every few days and you're
Hmm.
not in a rush to close it, yeah, sometimes the management is not something that's going to be immediately something to worry about.
Yeah.
Um, and if you, and then maybe that's also part of the thing. If you have a delta neutral assumption with a monthly timescale, you have to trust yourself to some extent, not flip flop and say, oh no, price went down. I was wrong. Let's close and redeploy, but rather like make the market kind of try to beat you. Yes, it may move back and forth, but if you're trusting your guts in the monthly timescale, then you can just kind of let it play out, which is what we've seen a lot with Rosalie. Sometimes we're wrong and we know right away, which is 25% move. There's no hope maybe to coming back. Then yes, you come back. But if it's somewhat in range, the monthly makes it somewhat easy to manage. You don't have to kind of be on top of it 24/7 to
Right.
manage
Right.
the position.
Right. Okay.
And speaking of which, so there's different positions here, and maybe we'll do the ETUSDC because this one we can see other people. This is one of the more active ones, but we can see other people managing this, so we can just take that position and one-to-one mint it in uh, in Panoptic. And in that case, well, I'll just do the preview here. Um, it was crashing a lot last week. I was able to fix it. So this is this is your position if you were to migrate this in the Panoptic pool. This was a LP position in Uniswap. We see the range 1500 to 2006. It has some composition of token A, token B, and this is what we see here from 1500 to 2006. So that position, if we were to take it as it is, it would move into Panoptic and live alongside every other position, and you would earn fees, and you would just do the same returns that you get on Uniswap. And if you do this, though, you'll be pretty much on your own, meaning that there's a standard that seems to emerge in Panoptic, meaning that people sell options at specific widths, some like run numbers in terms of strike, and we don't necessarily see that. Yeah, this doesn't necessarily overlap with anything else. It's a non-standard width with a non-standard strike, and it's just taking the one that we had and moving it. So when Helen created this, she had maybe some range in mind, not necessarily the standard one that we see with the monthly, weekly, or daily, but this is kind of the position, and just moving that one to one would be not an outlier, but then only its own width, its own kind of set of parameters, which is fine. And this is what Helen was doing before, but you're not necessarily tapping into that more network effect of more positions being sold. So this is the position that's been created. It is somewhere between weekly and monthly in terms of width, and that's kind of fine. But this is the same position, but with the weekly timescale.
Hmm.
Same position with the monthly timescale,
So it's
and
like they sold a 14-day option almost or something like that.
exactly, and it's fine. Someone may say, "No, yeah, I don't want a weekly or monthly. I want to have it 14 days," and that's is how what you guides
Hmm.
your width. So in that case, it's fine if you want to now see, because if we were to look at this one, just migrating it but changing the width, changing the time scale,
Hmm.
then now you're tapping into existing strikes. And what we see here is that your put would earn you 18% more fees because it's being purchased, and your call will earn you 2% more because it's also being purchased. So that could be also an interesting decision point, because whatever you chose in Uniswap is you on your own. But if you were to go to that standardized set of strikes, you can now move a little bit into a realm of earning a bit more fees and not just kind of be on your own. So that's another one where you earn 20% on the puts, 9% on the call. So that's another kind of key point of position migration. You could move it one to one, nothing to worry about. And it's exactly the same as Uniswap. Or if you're willing to not compromise but adjust your parameters a little bit, then you can tap into some strikes which have a higher return, which is what we see here.
Gotcha.
And this is kind of the existing liquidity here. It's been sold, some of it purchased, and that's why you have kind of it's emptied out. So you are earning more because the emptying part is people buying that option.
Right. And sort of off topic, I guess, but I mean, one of the coolest parts about Panoptic and what you wish you could do, I guess, in Uniswap is being able to take that out of range liquidity, I
Yeah,
guess, or things that you think is like poorly managed. So this will probably be, yeah, I'll
a lot
don't
of
mean to be down the street, but all of that stuff kind of off to the right, you could theoretically purchase and kind of redeploy elsewhere, right?
exactly. So there's the workflow is one, we take your position one to one, moving into Panoptic. Second one is that you can choose a standardized width and price that it fits with existing ones. But once you've done this and once you're used to Uniswap to Panoptic, then yes, you can tap into these more fancy and maybe more interesting trades, which is, as you mentioned, moving liquidity that's misplaced.
Well, I'm
And
just thinking if like if
yes,
I'm want to triple down on my position, right? Because I feel very strongly that I'm deploying capital correctly and I'm in a good range and I feel good about it. I can up the leverage, I guess,
yep,
right? I can do that. Or I could also kind of tap into like misplaced liquidity,
yeah,
I guess.
exactly. You
Or
can magnify that position not through borrowing, but rather kind of relocating liquidity.
all right. And what is the why would I do relocating versus kind of borrowing?
Yeah,
Or
yeah, yeah. So the this is a put option that is liquidity from in the money put to at the money. This is the payoff that you're exposed to. And yes, I would say that the relocating is directional in nature a bit more. You have now a negative delta. This is slope going down. If the price increases, you are losing money in a sense, and you're locked into it. You would need to buy both sides at the same time, but there's for some reason more in the money liquidity that's misplaced than out of the money. So that would be another relocation, but is bullish. Now you just have to work with what's there, and this is a bit more bearish. Now you have this extra capital exposure to think about. Whereas if we were to do the very simple kind of neutral, then you have risk on both sides, but you have the more neutral middle. So that's kind of one reason to maybe control the payoff a bit better, creating that delta neutral position and increasing your size, as opposed to getting something that was somewhat neutral, but now if you go and create a put spread, you become more directional. And you may not want to have that directionality. Maybe you do, but if you don't, meaning that yes, you're still bullish, then yes, you'll earn fees and you'll do it very capital efficiently, but then you will lose money on the price action.
Right.
And that's kind of the trade-off, of course. The things we've seen at Rosalie is that you actually want to have multiple positions. You can have one that's net neutral. If you now get a second position that is partially bearish, then you can create this to supplement that liquidity. You just add more liquidity in range. You can even imagine having that strike be a bit narrow, maybe not as narrow, but you can have this very extremely narrow, which will earn you quite a bit of fees for cheap, but you have a lot of downside risk. So the hedging and the slightly more advanced kind of multi-legged strategies where you buy an option is something that works a bit better as an LP when you have one position to hedge or one position already present and you want to kind of neutralize some of it.
Gotcha. Okay. Not gonna do that today, but
exactly. And without kind of overwhelming, you could have like multiple legs doing multiple things, and that relocation could be part of something that's a little bit more kind of broad, and you sell maybe another option at the same time where you have lower risk on the upside, still downside risk, but now you have twice as much liquidity where you put some liquidity of your own but also create that spread at the same time. So you have two options at the money that have been put there, and then one that removes liquidity, and that now transfers something that is a bit more neutral to bullish as opposed to being purely bearish in a weird way.
Yeah. It's just funny seeing this, I guess, that image, just because it looks horrifying. I feel like from
this one, you mean?
Well,
This
I mean, when it's zoomed in closer like this, but when it was farther back, it was it's just pure red, right? It just looked like it was just a very slim
yes
at the top, but it's a little bit, I guess, yeah.
And you can tune your parameters. This is definitely better also, I think, because you have no upside risk,
Yeah.
And it's similar to a put, but you have this region which earns twice as much. And depending on how you frame this, you can even have like this for free where it's not in range, or even if it's in range a little bit. That is a ratio spread. This is also a bit more advanced, but you're putting some liquidity, relocating liquidity as well, minimizing your upside losses. And it's now truly neutral to bullish because you make the most if it stays in range. And if you're bullish by nature, then you may not even have to worry about the red side because you say, no, I'm so confident that we've hit the lowest of the lows that I don't even care about that red union. I just want to kind of have this between 1400 and 2300 is where I make the most money. Bring it on. That's going to be your position type of thing.
Nice.
So this is speed running through a few of these strategies.
Put on a ratio spread at the end of this.
So yeah, we do preload this here again. If it's in advance, we figured that it was almost too overwhelming when you start.
See, right here, this view, this looks hilarious. It looks like you're losing no matter what you do.
Exactly, and it's similar to even Uniswap. You start at zero, and then you earn more fees, and this is kind of what you accept. The more fees you earn, the higher it gets. But yes, this is implied that if it stays in that range, you earn a lot, and that goes up and up. But yeah, so I would say that the next step for Helen is to
let's get our funds over. Yeah,
and maybe we'll try to do the trade. Are you also bullish, bearish, neutral on ETH? What's your take here?
To my greatest detriment of all time, I'm always bullish on ETH, but for now, I would say I'm more bullish, but Um, I could see it. I could see it dropping down to like 16 or 15 again in the near
Oh
future.
my
But
god.
I feel like that would be like, I think that there's a nice comfort. I bet that there's like a nice comfort base level there, but like
Yep.
I want it to go up. But,
Because so, and then this is what the payoff looks like. What you want
right.
to see, the delta neutral means it's flat on the top, and that's fine too. But if you say you might be a bit bearish still, you can transform this and move it a little bit so that your max profit is around, could be even 1600, meaning that you don't think it's going to go above 2K, you don't think it's going to go above below 1300. But if you think the new equilibrium is around 1600, this is something that you can do as well. I mean, without.
I would say 18 is the more. I like 18 better. Like I'm happy with where it is right now. It sounds right, but I'm just saying I could see it dipping down there and popping back up again. Is
Yeah,
basically what I'm saying. So like
exactly.
this looks a little bit, yeah. Like the low end is around 15, 14, and then the high
It,
end, yeah, between 20, like yeah,
yeah, so
2200.
this is 14. I think this was the maybe enlarged one, but yeah, this is between 1400 and 2300.
Right.
Uh, I would say again, and this is the strike to some extent is what you think the new target price is for the next month. Meaning, is it going to hang out more around the strike currently of 1800? And say no, I think it's going to go back to 2000. You can just move the straddle or the two
Right.
strikes closer to the new price, and you have some directionality. It's still neutral to bearish because if your short term is a bit more bullish, neutral to bullish, sorry. Short term, you think it's going to go back to 2000K after the next Vitalik tweet and then stay there for a while.
Yeah.
That's also another way. So the freedom, I'd say, of Panoptic is that you can express some pretty complex price action into a single trade.
Hmm.
Maybe we'll have AI and LLMs kind of fill the blanks for the people, but that's kind of the power. If it's a perp, it's very binary, up or down. You don't have a price target, you don't have a time target either. It's just one immediate trade. Here with Panoptic, with options in general, you have some price target, some time scale, and you have to wait for that time to actually see it happen. But it's actually uh, very expressive. There's some grayness to it. It's not just black and white. You can express any opinion, and again, as long as you trust your gut, more often than not, you can frame it in a way that will make it. You earn money in the long term type of thing.
Right. Yeah, and I think my favorite trade is is during the year time scale with with the ETH and just look at
Yeah.
that.
So maybe
Look at her.
so we'll do this and then maybe log off. But yeah, let's look at this. If you forget about the weekly, monthly, but in a year's time, do you have a target price? Not maybe coping, but yeah, a real realistic price. We would say, okay, it would be nice to be back within that range in a year.
Well, okay, if you were gonna take the directional bet, right, like for sake, like I will exclusively always dictate my decisions on most of the crypto market based off of how I think Bitcoin is going to
Yes.
do.
Hmm.
And whether that's right or wrong, whatever, that's a whole other discussion. But if I was to listen to the likes of, say Arthur Hayes or some of these other kind of more bullish people on Bitcoin, is that kind of
Bitcoin to a million.
well, yes, but in the next 2 years or something, right? You could expect it to kind of head towards 250K or something like that,
Yeah.
right? Inherently speaking, even though I know that the ratio of ETH and BTC is going down, like I still think ETH is gonna ride that wind regardless. Like it's going to like as is the rest of the crypto market.
Yeah.
And so I would just inherently put it as a kind of more bullish, just regardless of your personal feelings. I feel like on or any of the crypto, but if Bitcoin does kind of take these strides and kind of all of these other groups continue to make some of these deals, right? Ripple trying to take over USDC, all of these things, just inherently the ecosystem is going to go up. I just think ETH is going to fall.
Yeah. And again, that the year to multi-year time scale, I think we all see the vision, I guess, since we're in crypto.
Yeah.
The it's always, oh, we're like in the internet in 96 type of thing, but at some point it's not going to be like, oh, we have a billion users, but it's going to be like ubiquitous. You won't even see it, but that's kind of one aspect, which is if you think that most of finance does convert or transfer to the blockchain, maybe not all of it, but I do think a lot of chunks will still go to ETH, then that kind of guides your principle. But in
Right.
that case, we could even put some bounds. So yeah, regardless of the price, but do you think it's going to go below 1500 again in the next year or above 6600? Or you would maybe adjust those strikes a little bit?
I think these strikes are pretty solid. I think even if it dropped below 1500, I feel like I would be fine to
Yeah,
just hold on to it and just be like, it'll pop back in range, I guess. Like,
yeah,
um,
exactly.
as the LPer in me, and like, no, I'm not locking in those losses. I'll just wait for it to pop back in.
Exactly. And to some extent, you're holding ETH maybe on the way down, which is kind of something that you may still be happy with. But no, that's right. We're looking at the yearly strikes. There's some activity, but it turns out that someone has bought some calls, some yearly call at a 3,000 strike. So if we were to deploy some liquidity here, that leg would earn again 10% more.
Right.
So I'm not sure a lot of Uniswap LPs use such a wide uh
I
range.
don't think so, but I think it,
I think they should,
I
but
mean,
yeah.
I think they did, right? They did when it was UniV2, right?
Yeah.
But like now it doesn't make sense to do so, I guess, in V3 to some extent, but I don't know.
Yeah, but at least if most people use a short or narrow position, they are locking themselves into short-term bets.
Right.
But if you do want to see a long-term bet kind of realize itself, then this is how you do it in the yearly one. And again, I don't think anyone would disagree with you. Say you say I think the price is going to stay between 1500 and 6600 on ETH. Then might as well deploy liquidity, might as well earning some fees. And again, it might be worth, so that is people buying that position. And I'm curious, like, yeah, someone bought that. So I'll open this and also see who's selling. But again, we can do some spying on that. Oh, interesting. So this was opened 16 hours ago. So someone very recently expressed their bullish year-long. This is like a
Oh yeah.
leap option, like leaps option. They purchased 2.5 ETH worth of calls at the 3,000 strike. And this is the upside that they see. And again, if it hits 6,000, they make, I know, $6,000. So again, this is the potential convex payoff that people want to look at when they trade options.
Right.
It's a year time scale. So there's a lot of time for it to realize itself. And the premium is going to be paying over time, but this is a 7,500 position that you hold. You can double your money or even more depending on the price. But that's kind of what the buyer is seeing in their portfolio, which is all right. I think it's going to go so high that I can do these year-long bets, right?
Yeah. I mean, this is where I feel like these types of payouts are a lot more fun for like some of the meme coins, I guess, or some of the like
I know.
individual projects rather than like the ETH BTC ones, which is just kind of like, I don't know, directional, I guess, based off the industry. But yeah, that I think these are going to be way more fun for some of the meme coins.
I mean, and we've seen it with even the meme coin trades with the Rosely. Sometimes they do move fast, and we were on the sell side. We got burnt a couple of times, but yeah, it's
Um,
not uncommon to see 2x price moves on these meme coins.
yeah,
Whereas it's going to take months, maybe if we do slow growth of 2x price. So that's the buyers. They see some pretty bullish outcome of ETH. They have a year to see it happen. And I'm going to look at the seller on the other side. And oh yeah, this was opened a long time ago,
mhm.
interestingly. And they're earning, oh my, yeah, quite a bit. So this is a
Look at
kind
that.
of sizable position, which is $30,000 of capital. And they earned 1,200 already, up to the right constantly. And even though it started at 2,600, price went down, but now they're in the green. And again, if it keeps going up, they are back to that max profit. So this is the other side, the flip side. Some people kind of maybe afraid by the losses, but at least this is 2 months into a year long, maybe almost
Right,
3 months.
but the loss weight, I mean, it would have to get all the way up past 35,
4K, or
right? Yeah, but at that point, I feel like you,
you earn
you've
fees
got,
on the way up. Yeah.
yeah, and you've got time to close this position too,
Yeah,
right?
or yeah, the downside is they've tested. Is this? Yeah, it was tested and even out of range for a little bit when it did collapse like crazy the other day. But on the upside, if it nears 2600 again, then they are at their max profit. It's going to be pure Theta, pure
Hmm.
Streamia.
Yeah,
And yeah, it's
I like this
actually,
position.
yeah, this is also another bet which is quarter of the way through. It's working perfectly. You of course never go back to the same price, but you're at the point where they start not losing money if the price goes down as much.
Yeah,
And if it goes back up or stays in that range, then they are making more fees. So
yeah. But I just feel that this is kind of one of the ideal positions for an LP to be in, right? It's like
yeah,
you feel
maybe the
somewhat control.
cherry on top is that they are getting paid more as well with that one.
Exactly. Right. I mean, of course, that's the dream. Getting a premium off of your position.
Yep.
Um, okay, really quickly, just before we head off, I just wanted to quickly you mentioned it earlier, but I just want to mention it again about our base trading competition, which is going to start in exactly 14 minutes.
Yes.
And
Let's
so,
see.
just really quickly going over how you can enter, which is um,
Just
what
depositing.
you
Yeah.
guys
So
do.
do you want to go over some of that?
I mean, these are them right here, right? So there are a lot of prizes to be won, right?
Yeah,
Like,
exactly. So
based
this
off
is,
the leaderboard.
yeah, from the leaderboard we have the pips, the points, but also at the same time we have the competition. And yes, we want to have people try out on base, do it in a way that they don't worry about gas as much. They can sell options, they can buy options as well. But the key point is that can you return the most given your deposit, which is we don't favor absolute P&L, which could be like a whale over competing, but rather the relative one. So you think you can trade as small as $100 of capital is needed, but once you do this, then yeah, you can odd trade it in the whales where first prize gets some pips points from Panoptic, also cash prizes. Uh, the top 50 get some points. The top 20 get cash bonus as well. We also have criteria for volume. So we want to have people kind of test it out, and there's a clear component of volume as well. And you pay fees as a way to volume, so that we want to incentivize people kind of that want to trade often, that may not be as skilled, but then and maybe losing in the long run. But if they were active and actually able to manage their position, then we reward some of the activity, and then we give them cash, but also a special plushie.
Also, I mean, you're taking a bigger risk, right? Trading more capital. So you should get some return, I
Exactly.
guess, in this competition. Okay, very cool. So yeah, going live in a few minutes. And then what were there? There's only specific pools, right?
Yeah, I think it's
For the
only
bubble.
the. Are we starting only with the ETH USDC one? I believe so. So I'm not sure if we do the CBBT. We probably just do the ETH USDC one. So
I think it's the ETUSDC one.
yeah, you can look at this is the V4 pool slight gas advance. Some people have been trading already. You have some strikes there, but you can buy directly from that markets page, or you can deposit and interesting, yeah, or deposit or not. But yeah, uh,
Right. And I believe in 10 minutes there will be a tweet going out that will have all this information as well.
exactly.
That'll
Keep an eye open. This is very cool. We have the competition. Very excited about this. Maybe I'll trade a little bit, or maybe Helen Keller too. But yeah, feel free to.
I gotta put these positions over there.
I
Or
mean, we did
Helen.
one internally as well before we launched in December. This was very fun, and you can. It's like PvP almost. You can see who's trading on the other side, watch their positions, set up a trap, maybe create some very cool positions there. So,
Yeah, holy crap, look at these APYs right now because
oh yes, up for grabs. This is kind of the historical one. So the depositors and the activity.
Mhm.
The TVL again. I think it was 30K. So there is some level of TVL, but yeah, the key one is that
Right, right, of
the
course.
more active there is, the higher the TVL, the APY.
Yeah.
So
So I guess yeah, for everyone who's in the competition as well, you could be earning, like you said, depending on if you put less
yes,
leverage, you'll be earning some borrowing and lending fees from other people's trading. So it'll all go towards your P&L until someone will win.
yep, exactly. All right, so that's it. I think thanks a lot for those that hung out, the conversion therapy is going underway. This is very cool. But also, we'll maybe on Wednesday we'll touch about maybe talk about the trading activity. This was very fun too. So on the commission. So yeah,
Yeah, and I think we've got also a fun episode coming up of myths versus facts, right?
exactly.
Yeah.
So Amy from the research team on Wednesday will go over some of these questions. Maybe we'll do a tweet that people can ask questions as well on Twitter. But the key point is that yes, when people think about options, there might be some misconceptions, something that may not be clear. So we want to go over some of that too with Amy, myths and facts about Panoptic, which is going to be kind of rapid fire,
Yeah.
in the hot seat type of questioning about options.
See how many controversial takes you have.
A lot, but yes. All right. This is great. Thanks, Izzy. Thanks, everyone. And yeah, we'll see you on Wednesday. Oh, research also team on Tuesday, but this is cool. All right.